Good morning, everybody, and welcome to today's session. I'm sure we're still going to have a few people joining us as we get going, but seeing as it is 9 o'clock, we're going to get started and kick off this morning. So welcome to every single one of you. I see a lot of people have joined us, and I am sure that you are going to have a very informative morning as we are going to go through this check-in session 2 in terms of audit planning. Our audit level 2 series, which is obviously following on from last year's session. So we are obviously working on the assumption that most of you have either audited for a while or otherwise you have attended audit level 1 from either 2024 or 2025. So you will see also that later in the day, we are going to maybe just check on some things in the methodology and things, not necessarily as was want to call it first time instruction, but rather as a reminder, because it probably has been at least a year since you attended audit level 1, if you had attended it. All right, so that is then us getting started. As I mentioned in the chat and the Q&A earlier, you can download the slides for today's session from the Success community, and that is also in the QR code if you wanted to then follow it through from there, or otherwise I also provided you with the link in the chat and in Q&A. Good, let's get started then in terms of the administration. So first of all attendees are muted. You can use the chat or the Q&A function. They both seem to be active this morning, so they are available for you. If you do lose the signal, just join again. Remember, the session is recorded, and we do make them available both on YouTube as well as then on the Success community. And we're shortly going to go to the Success community where I will show you where those recordings have already been added for some of the previous sessions. All right, so that really then being the administration. Next up then, please engage with us. It's fantastic if you are engaging with us, firstly, because then we know that you are also following along, but also because this really is your opportunity to ask questions and to check whether you need more information or check your understanding also from having completed the online modules. So ask the questions, put questions or comments in the chat if you need to. Use the reactions. You can see there on the slide. I've put a little block around the Q&A, but just to the right, I think it's about 2 or so items, 3 items to the right, you will see there is also reactions or react, where you can put a thumbs up or I don't know if you want to put an angry or something, if there's something you don't particularly like, but whatever it is, but react or use the reactions as you feel necessary. And then we're going to do polls as well, especially because the audit level 2 session is mostly about checking in and making sure that whatever you learned on the e-learning modules you are comfortable with. So we're going to do a lot of polls, almost like a flip of training. So rather than me just retelling you everything that you've watched on the video, rather almost checking and saying, are we comfortable with this? Are we sure we understood that correctly? And doing that through the use of polls. So at the moment, you might experience, I actually checked in with our events team, and they told me that some of your computers may actually, through some or other security, or I don't know if it's antivirus or something, be blocking the use of the polls potentially. So if you aren't able to participate on the poll itself, so you might see the screen pop up and then you select your option and it doesn't want to let you submit, that's perfectly fine. I have the chats open on the side, so you can always participate by simply answering or submitting your answer in the chat as well. So either way, that is perfectly fine. We are working on a solution, and in the last session, we'll definitely have something, even if it then is an additional polling system that we can use to also have some prizes as to who has the most questions answered or fastest or something like that. So we are going to have some fun at the end as well, because auditing can be fun. One of our colleagues, in fact, Samu, who's going to do the Audit International presentation, also got excited about auditing earlier in the week as she was preparing. And that is fantastic to me. I want you to be excited about auditing because, yes, it's a lot of theory. And yes, sometimes there is some schlep work involved, but auditing really is I like to talk about it or refer to it as an alive science. It is not just something that you do and you go through the motions. You are really applying your mind. So hopefully that will also come through in the topics that we're going to discuss today. All right. So the topic for this week's round is then risk assessment at the financial statement level. And in our last session, which is scheduled in about, I think it's about 3 weeks. If I look at the calendar, it's on the 27th of March, where we will have our third session for audit level 2. And there we will move on to the risk assessment at assertion level. Or account balance if you want, where we then look at assertion level risk. Today, though, financial statement level, or some people even refer to it as overall level. But of course, the auditing standards talk about financial statement level. So what have we got planned for today? We are going to see where we are on the track in our theme of this year. Of course, we are in a Formula One theme, so we are racing cars, and we're going to see where we are on the track, see where we are in the process of planning, and then do a number of polls. As I mentioned, we're going to see just how we are in terms of understanding principles, seeing where we might have misunderstood something, where we need to maybe just get a little bit more information, and sharing those. Then we're going to see what's coming up, just touch on a few principles or definitions for that, and then we'll have our breakout sessions towards the end of the session, where we will then split into a probe session and an audit methodology, audit international session, to go and see how do we apply all of these principles on the software when we go and audit in the different audit methodologies. And a part of that is also to look at what is new in the 2025 templates. So you'll know that the recordings that we did was from last year's session, and so there are a few updates, changes, enhancements that we've made in the 2025 template. So we'll also look at that so that you are aware of that, because of course the recordings and the engagement file that you downloaded from the e-learning on the Moodle site, those are of course done on the 2024 template. And so we have provided you then, later in today, we will provide you then with the information of how that's changed or been enhanced in the current year. All right, so let's get started. Where are we in this process? So the course, of course, audit level 2 is planning the audit. And in the process, we have done client acceptance and continuation. We have obtained or started to obtain an understanding of the client. We have set materiality, but now we are in the risk assessment phase, and we are assessing the inherent risk, sorry, not the inherent risk, the risks, inherent control fraud risk at financial statement level. So as I mentioned before, the session today is for an opportunity for you to ask questions, and then also just to touch on a few points. Right, so what was in the e-learning for this session? So this is session 2 of 3 then, and in module 2 on the e-learning, you would have seen, had to watch video 5 and video 6. Now, before I jump into the poll to ask you how many of you have managed to watch that, let's just quickly go and have a look at where do you find all of this stuff, because otherwise I'm going to forget to come back to it. Excuse me. All right, so I'm going to just quickly look at the website here. So that link that I provided in the chat, or whether you followed the QR code, it's going to take you to the Success Community and to this page. As a reminder, again, if you are on the Success Community overall, if I just go to the home page of the Success Community, that obviously is going to change every now and again as new information is shared, etc. While we are busy with the webinar training series, that session is often updated, so very often you'll see that as one of the latest posts. However, I just always like to go to the search button or the search field, and I just simply type in Get Ahead, and then I will see the 2026 page. Click on that, and that will bring me straight to everything I need to know about Get Ahead 2026. All right, so that page is just refreshing, and then I will show you where to find everything. So obviously we've got the track schedule, we've got a lot of information, and then we will go firstly to the e-learning courses. In case you haven't yet started with that, there is an article that shows you which courses are available, where to find it, how to enroll if you haven't been enrolled automatically, etc. But then the learner resources, there we have changed slightly from the previous session. There used to be a few links here. We have now incorporated it into the schedule. So you will see if you go to the track schedule and you scroll down to audit level 2, which is of course what we are doing today. First of all, the e-learning, the material for the e-learning modules are already available there to download. So if you're using Probe, you'll click on the Probe one to download your caseware file. If you are using Audit International, you'll download the Audit International engagement file. For session 1, we had the probe slides. The recording will also be listed here shortly. And then you would have completed module 2 for today's purpose. And there we then have the slides and the resources necessary for today's session. Right, just below that, you will also have the recording soon. Well, obviously not today because we only have the session, but in a week or two's time, those will also be made available. So maybe if I just scroll up and you can see where we have already made the recordings available, you'll see the slides or the resources as a separate link. And then below that, we include the link for the recording, which is on YouTube as well. If you want to go have a look at YouTube, you can see it there. Otherwise, this will provide a very quick and easy link for you for that. So really your track schedule should almost be your central location to go and download the material, watch the recording if you have missed it, etc. All right, so that is the success community if you need that. Good. So I mentioned then, and in the bottom right-hand side, you can see video 5 and video 6 from session 3 is then the recorded sessions for this week's material. Video 5 would have been the theory. There was a lot of theory. And video 6 would have been the application on your software, on your methodology. So there was one separate one in the probe methodology section, and there was a different one, of course, in the Audit International section. So those ones are there. And I want to know from you, if we then launch this poll, I want to know how many of you have managed to complete that. Thankfully, it was only really, I don't even know if it was a full 2 hours to watch that necessarily, so it wasn't too much, and you have had quite a bit of time. So have you watched the material yet or not yet? And that's really all. So just to know how many of you have done that. Wow, I can see like 75% of people have completed it. Obviously need a few more. Okay, good. So it was the guys that have watched it that completed first. Let's have a few more responses. We are almost 75 people, so we really can have a few more people. I'm not seeing what your name is, so if you can't, if you haven't done it yet, you're welcome to let me know. Thank you. I see there are a few people who say they haven't managed to do that yet. In the chats, we are also seeing a number of responses. No, that was just the poll that's coming through. So if you're not able to submit your response on the poll, you can always just submit your response in the chat. But I am seeing that there's quite a number of people who have not yet managed. Thank you. I see some chats also coming through. Right. Remember that the level 1 and level 2 material was all developed with the purpose of doing the online, and then we're just checking in. Obviously, these sessions also important, but the majority of the detail will be included in the e-learning. And when I discuss examples, those will also then often be referred to from the e-learning, or just a reminder or a refresher. All right, great stuff. Thank you very much. I'm very glad that a number of you managed to complete the online training. All right, so let's just see again, where are we in this process, in the auditing process? You'll remember that we started with the client acceptance and the client continuance decision, and we discussed that in session 1. And then we started with the planning, and we started to get an understanding of the client. And with these 3 blocks saying understanding, do the risk assessment, and then decide on or develop your audit strategy and plan. Those 3 things are almost changing as you go along. And so the standards use the word iterative, which means always improving, continuously improving. So as you go through the documentation, your understanding of the client will improve. Your risk assessment will, let's say, get more or get better. You hopefully don't get more and more risks as you go along, but you'll have a more complete list of risks. And that, of course, will improve your audit plan and response, your strategy, make it the most efficient, the best, most appropriate response as necessary. And then when we get to the execution, doing the field work, we'll hopefully address all of the risks. All right, so that is then the planning section that we are busy with. Right, now let's look at a few topics then from from the material. So first of all, if we think about internal controls, the first question I'm asking is, what component of internal control is essential for the functioning of the other components? So you may remember that we had 5 components of internal control. I'm asking you, which of the 5 is the most important one in terms of almost being the basis for the other components to also function? Some people refer to it as the foundation. Of course, in our video, we used it in a slightly different way. What component of internal control is essential for the functioning of the other components? Right, I see quite a number of responses coming through. Is it the risk assessment process? Is it the control environment? Or is it the control activities? Of course, the question can also be, what are the other elements? If we've got 3 elements listed here, but we will be discussing all of them as we go along. So let's see, which one of these 3 then at least is the essential component of internal control for others to also be efficient, to enable the other elements of the internal control process to work properly. All right, I see we are ending with basically 59% of delegates saying this is the control environment that is essential for the functioning of the other components. We've got a few people saying the risk assessment process and a few talking about the control activities. Now, what I may have just needed to also confirm is this is not the auditor's risk assessment process, but the client's risk assessment process. So the elements that we have listed here is risk assessment process, where we ask ourselves whether the client is aware of the risks. Have they done a proper risk assessment? Have they asked themselves, where can things go wrong in the audit? Sorry, not in the audit, in the financial statements. Where can things be misstated in my financial statements through the accounting records or through transactions that never happened, etc. So it is important for us to then also just remember that we are referring to the client's risk assessment process. We're going to get to our risk assessment process soon. So that is part of internal control, but that is not the essential one that we need necessarily. It is indeed the control environment. You will remember, and I'm going to shortly show you that slide as well. We had a house and we said the control environment is like the roof to the house. If the roof to the house has holes in, if it doesn't cover the walls, it doesn't go slightly over the walls, then when it rains, it's going to rain in through the holes in the roof. It's going to actually affect the walls, and the walls are going to get wet. And we are going to sit with, let's call it, a mess in our house. So the roof to a house is essential in keeping the rest of the house dry. We can have the best control activities, we can have a fantastic risk assessment process, but those are just the bricks to the building. If we don't have a roof that seals it all off, then we can still have mistakes in the financial statements. We can still have an inefficient or deficient internal control system. All right, so control environment, that obviously talks about those charged with governance having the right ethical conduct, having a good ethical culture in the firm. So I can have the best control activities, say 2 people must sign, this must be done, that must be authorized, etc. But if I don't have a culture of ethical conduct, if I don't have the right HR policies, etc., then that's not going to help. The same with monitoring, the same with risk assessment process. I can identify the right risks, I can put in place the right controls, but if my control environment is not appropriate, if the culture in the business is not right, then that's not going to actually help me any. Good. Let's have a look at the next one. So again, the client's risk assessment process, what does that refer to? So we're saying, does it refer to the client's assessment of risks, rating them and addressing them. So in the client's risk assessment, does it just refer to the client's assessment of risk, rating them and addressing them? Does it relate or refer to the assessment of the risks related to the financial statements? Or does it refer to the assessment of risks related to each project, to each customer in the business? So let's see, what does the client's assessment of risks, risk assessment refer to? Just quickly want to launch that poll then. There we go. Good. So which one of these three options is the one that it refers to? When we talk about the client's risk assessment process, what is that? Okay. Yo, you guys are fast on this one, eh? Sure, I just want to give an opportunity for a few more people to participate, because I see we've got a lot of people attending the session, but not that many actually submitting a vote. Remember that when you are submitting on the poll, I can't see, I'm not going to do anything with your response. And if you can't click on the submit button, you can still respond through submitting a chat or a Q&A, just so that we can see what your responses are, and I can see where to maybe expand or explain again. Right, I see some responses coming through in the chat. Thank you very much. Okay, so when we are talking about the client's risk assessment process, we are asking ourselves, what does the client do to go and see where things can go wrong in the business? Right, so it is more than just assessing where things can go wrong in the financial statements. It is also about saying, what keeps me up at night as a client, as the owner of the business, as the financial manager? What are those things where I don't want to actually suffer those losses? Let me insure against them. So maybe it is a matter of, well, I take insurance so that people don't steal my stuff. I take insurance so that if my factory burns down, I can still be in operation. It might be that I actually insure against cybersecurity or anything like that, or that I actually take steps to cover myself, to protect myself against cybersecurity. So that's just one example. It doesn't directly affect the financial statements necessarily, but it is stuff that can actually affect the continued operation of the business. So remember again that when we spoke about the client's risk assessment process, we said some clients are going to be more formal. So yes, there are businesses, very big often businesses, that have internal audit departments, they have risk committees, they have risk registers where they jot down every risk and they rate it according to this and that and whatever. And then they have these risk results and they say, these top 20 risks, we can't live with them, we need to do something about them. Or to say which of these can we insure against and which of them do we need to do something more. So we have those formal scenarios as examples. But in many of our clients, especially when it is small and medium entities, they won't have big risk registers and all those fancy things. So there we said, go and speak to the business, go and speak to the business owner, speak to the manager, financial manager, and ask them, what are the things that keep you up at night? What are the things where you have thought, shucks, if this can go wrong, I don't want to operate in or do business in cash anymore, because if someone steals all the cash, then, my staff is going to be at risk, etc., etc. Let me not trade in cash anymore. Or I actually feel that, especially a few years ago, we had lots and lots of load shedding. When my business does not have enough electricity to, in the case of wrap up, to manufacture the products. In the case of maybe I'm a trading company and I have stuff that needs to be kept cold or that can go off if there's not electricity, I can't suffer the consequences of that. It is better for me to rather install an inverter, to get solar panels, whatever the case is, to protect myself again when there's no electricity. I mean, we can use another example at the moment about water. What is the business doing about the fact that maybe there may not be enough water? In some areas of the country, there are big breakdowns of water where we just don't have water in the taps because of a variety of infrastructure that's down. And then in other parts of the country, we don't have enough water because there's drought, because there wasn't enough rain when the rain had to fall. And so the dams levels are not where they should be ideally. And so we need to save water. So what are we doing as a business to ensure that even if there's no water, we will still be able to continue? All right, so all those kind of things. As the risk assessment process for the client, what are they doing about that? As I started off by saying, of course, that also includes where can things go wrong in my accounting process? Where can there be mistakes in my financial statements? And how am I going to actually protect against those? But it does involve more than just the risk at the financial statement level, risks in the financial statements. Good. Then, when we think about management of the client inspecting the reconciliation for accuracy and for logic, making sure that the reconciliation was done properly, what is this a part of? So we say the client goes, whether we now talk about a creditor's reconciliation or the bank reconciliation or a reconciliation between the fixed asset register and the general ledger, whichever case it is. When management goes and they inspect that reconciliation is done accurately and that the logic of doing the reconciliation is appropriate, which part of internal control is that a part of? So let me launch that poll. We have the options of saying risk assessment, the control environment, as well as monitoring. So which option would you choose? Which of the internal control elements is that a part of? Quite a number of responses coming through. Thank you. So you can continue to vote still. Give your input. When management checks that a reconciliation was done correctly and that it's accurately done, I guess that it does actually cost, it does recon, eh? That the logic is correct. What is that a part of? Is it risk assessment? Is it control environment? Or is it monitoring? I get a lot of responses for monitoring, 60% of you saying that's for monitoring, and that is indeed correct. So monitoring is when someone goes and checks that the control activities that we had in place did in fact happen, did take place the way that we had designed them to be done. So not just saying, well, of course, the staff is of course going to do the recon correctly. I asked them to do the recon. It's part of our policy. They must do the recon. It's going to happen. I can't just assume it's going to happen. We want the client to say, I'm checking that things are happening. In the recording, I also mentioned, I said, as auditors, we are not there monitoring. We are not part of the internal control. We are there to see whether the internal control or the system of internal control is operating effectively. But we are not part of the internal controls. We are there to check and to audit whether the financial statements are materially misstated or not. All right, so yes, indeed, the element in the client's system of internal control that is operational when we go and check, or when the client goes and checks that the recon was done correctly, is monitoring. Good. Next one, control activities. Good. So here the question is, what does control activities consist of? What is control activities? And options we have there is it's activities or policies and procedures that will address risk. It is a test of control procedure, or it is controls to prevent fraud. Maybe a bit of a tricky one. This is, of course, not audit level 1. We are really challenging you on some of these questions. So what are control activities? What do they consist of? Which of these options best describe what control activities are? I really appreciate the responses coming through. Thank you. Let's get a few more guesses here. What would you say are control activities? So still control activities are part of our system of internal control, part of those 5 elements. And if we are monitoring those control activities, like for example, that a recon had to be done or something like that, we said we are monitoring it. So then it's the monitoring element of internal control. But control activities is also one of the elements. And what is that? Okay, see, we've got a number of responses. Good. So test of controls is something that we do as auditors. So if we talk about client control activities, it can or kind of almost can't be part of the client's control activities, because testing control procedures is often what we refer to when we test the controls. Yes, of course, the client can also test if they are working, and then you'd possibly think about like an internal audit function or role, or even the monitoring that then happens. Controls to prevent fraud, yes, those are controls, and controls are control activities. Those are the ones at a certain level. Now, control activities, I often think of them as at a certain level, but they don't necessarily have to be at a certain level. But they are elements, activities, policies, procedures that have been implemented in the business to address a risk of where things can go wrong. And if I can say it very loosely, where things can go wrong in the accounting, if you want, because we are talking about control activities in the financial statement process. So the correct option is then the first option that says it's activities, like controls to prevent fraud, activities, but it can also be policies and procedures in the business that will address risks, where the management of the client has gone and identified risks through their risk assessment process and said this is where things can go wrong. Load shedding, no water, cash can be stolen, whatever the case is, and a variety of other options. I can sell to customers who's not going to pay me. I can buy from suppliers who's going to go under, and then I don't have my raw material supply anymore. A variety of options. So that's what I did as a risk assessment process. I identified where things can go wrong. Now I'm going to put in place policies and procedures, or develop or design activities that's going to address those risks. And especially when we're then concerned about the financial statements, those control activities that will ensure that there aren't either preventing misstatements in the financial statements, or if misstatements still slip through those activities, those controls, then detecting them, and with that, detecting always goes correcting the material misstatements. So preventing or detecting and correcting misstatements in the financial statements. So those are then the element control activities, being activities or policies and procedures. Let me just grab a sip of water. Right, then the information system and communication. That's also one of the elements. So the question is, what does the information system and communication refer to? And the question here is true or false? The information system and communication refers to the client's use of IT. So let me see, is this true or false? The system of information, or the information system and communication, refers to the client's use of IT in the business. Is that what the information system and communication refers to? Let's see. Again, I said earlier, this is maybe a bit of a tricky one. These are a little bit more difficult. We've got 82% of the participants voting that yes, this is true. The information system and communication refers to the client's use of IT. I guess the question is, does it only refer to the client's use of IT? And that is the tricky part to it. So The information system and communication is one of the elements of internal control. And I'm actually just going to go straight to the slide where we discussed all of these elements. So the information system and communication, that one, of course, let me just get my laser pointer. That is that one, information system and communication. So that element is more than just IT, and that is what I wanted to make sure that we bring that home. The information system and communication involves all communication, all information systems. So it might also involve, how does a transaction get initiated? That might involve that someone picks up the phone. That might involve that an order request is sent through to say, oh, you know what, our printing paper is finished. We need to order more printing paper because we're going to have a problem if we don't have paper left. Or we need to order more of the raw material plastic that we need to manufacture our packaging goods, or whatever it is that we need to order. We're going to have a request for purchase. It might be that we are appointing a new staff member. So any kind of information that initiates transactions, that is also part of the information system and communication. And if you go and look at the definition of that, it very definitely refers to both manual and IT systems. So communication as well can be electronic communication, but it can also be manual or non-electronic communication. So it does not just refer to the IT system, it also refers to any other information and communication that happens around the financial statements. So it's very specifically here we refer to the process around financial statements. We are talking about the system of internal control and then with reference to the financial statements, but they very specifically not just the IT systems. So for example, in terms of communication, we can also say, how does management communicate policies to the staff? That doesn't necessarily happen through the accounting package or through an IT system. It can happen through emails perhaps, but it could also be that management has a staff meeting, or that management makes sure that everybody that joins the firm knows that there is a server where all the policies are listed. But that server, that's not necessarily the IT system, the accounting package that we use to draft the financials on, okay, or to process the accounting on. All right, so that just in terms of that one item of the poll. Now let's just quickly look at this slide, because this really is a summary of so much of what we are dealing with in this module. Remember, first of all of these red scrolls that are on the outside of our house, those are all of the elements that we need to get an understanding of from a financial statement overall level to be able to identify inherent risks, again, at the financial statement level. Of course, this might lead you to identify assertion level risks as well, right? So that's perfectly possible. But the standard ISO 315, the one revised in 2019, that one says that we need to obtain an understanding of all of these elements. And I guess the biggest thing that maybe stands out for me is that in the past, you needed to get an understanding of the industry regulatory environment, including the accounting framework or the financial reporting framework, which now that's actually been removed as a separate scroll, if you want, or a separate section. We need to specifically get an understanding of the financial reporting framework and a few elements involved in there. Right, so that's the, almost want to call it the outer side on the slide. And then when we get to the internal control, or the system of internal control, you will see we've clearly got the house here. And starting off then with the control environment being, as I said, in some cases, people refer to it as the foundation of the house. You cannot build the rest of the house if you don't have the control environment in place. From our perspective, we're flipping the image and we're saying the control environment is basically what protects everything else. You can even think of it as an umbrella if you want. So it might be raining, there might be things falling, etc. But as long as my roof is intact, the rest of my system of internal control is also likely to be protected. Next up then, another reminder there is just the first two bricks from the top. Those are I almost want to say part of the financial statement level risk assessment again. So these three elements, control environment, risk assessment process, and monitoring, those are the three considered indirect control elements or elements of internal control. Those three is what we assess at financial statement level. When we then later on, and that's going to be in session 3, move to the assertion level risk assessment, that's where we will then move to the second layer of bricks in our house, which will then be the direct elements of internal control, being our control activities, those control activities, the policies, the procedures, those actions, and the information system and communication within the firm. So those last 2 bricks then is what we're going to focus on quite a bit then in the next session. But the top 2 bricks plus the roof, those ones then being the ones that's of relevance for us in today's session. All right. Good. Next topic. So we've discussed inherent risk. We've discussed control risk to a large degree at financial statement level. Next up, we are looking at the fraud risk. So my question here is, we refer to the fraud triangle that I'm going to show to you again shortly, but my first question is, which of the following options is not part of the fraud triangle? So fraud triangle obviously means there is 3 elements, 3 legs in a triangle. So I'm listing 4 elements here: opportunity, segregation, rationalization, and incentive. So which of these 4 elements listed is not part of the 3 legs in our triangle, the fraud triangle? I see a few submissions coming through. Thank you. Good. We've got a number of responses, and by far everyone is saying the segregation. That is indeed correct. Thank you for everyone's responses. So I've got a few that say rationalization, and then a few talking about incentives and opportunities. So let's just unpack each of them. I just want to quickly close the poll, because I know some people are saying when the poll is there, they can't see the slide. So let's start from the top. And again, I want to remind you, in the recording, we have a case study where we are applying this, and we also, in the case study, and then we've got a few polls where we are actually unpacking and looking at a few of the points. So segregation refers to segregation of duties. And segregation of duties, or let's say the lack of segregation of duties, will be there where we then say, well, if one person is doing everything, it possibly gives them an opportunity. There is a deficiency in the internal control, and it will give them an opportunity to commit fraud if they so wish to. So let's have a look then at our fraud triangle, and here we will see the other 3 legs. So opportunity right at the bottom in that yellow line. Opportunity is often a weakness is internal control, because there is where in that weakness, if you abuse the system, if you want, that's where you can then get the opportunity where you can actually go and commit the fraud. I often like to think about it to say, even if I've got the best will in the world to commit fraud, if there is no opportunity for me to commit it, I can't. All right. Of course, that's where also collusion comes in. If we work together, you and I give you a share of the profit if you help me with this, that obviously makes another element to it. But opportunity is then also that I knew I could ask you, there was an opportunity for you to also help me. And because no one else is checking whether the controls are working correctly, we had the opportunity to do that. So that's the first leg to it. The second leg is incentive. And you might also remember that in the recording, I also referred to pressure. So incentive might be to say, if we make this KPI, they've set this budget for us, they've set this goal for us, and if we make this goal, we can get a really nice bonus. Now, with this and that happening in the with this happening in the economy, or with that happening in the interest rate, or whatever the case may be, it doesn't look like we're going to make our goal, and therefore that we're not going to get our budget, not going to get our bonuses. But I've identified this opportunity, and if we actually do this or that or the other, then we can get that bonus still that we know we deserve. So incentive wise, we have something that pulls us toward committing that fraud. We often also refer to it as pressure. And I remember someone in the recording or in last year's session also mentioned something about the fraud organization that had this nice little short thing also about fraud and about incentive and pressure. Pressure often is a negative incentive, if you want, almost putting pressure on you to say, you need to help me to do this because I want to make the budget. I want to make that goal so that I can get my bonus. So I need you to help me and you will help me. Otherwise, something bad's going to happen. So incentive almost feels like a carrot, something that's triggering me, that's drawing me, whereas the pressure almost feels like a stick or a threat or something that pushes me to go do it. All right. Of course, we need the opportunity. Incentive is there. And then I still want to believe that even if you've got all the pressure or incentive in the world, and there is this weakness, you have the opportunity. Unless you believe it is okay to commit this fraud, you probably won't be committing this fraud. So how do you convince yourself it is okay? You rationalize it to yourself. You tell yourself why it's actually not so bad. Everybody else got really nice salary increases, but in finance, we didn't get any salary increases for whatever reason. And so I also deserve it. So I'm rationalizing why it is okay for me to commit this fraud, why it is okay for me to do what I need to commit the fraud. Okay, in terms of rationalization, there's also another word that we also use is justification. So everybody else got the salary increase, everybody else got the bonus, everybody else drives nice cars. I also want to drive a nice car. Why can't I drive a nice car? I also work long hours. And so therefore then motivating myself, telling myself why it's actually okay. All right, so those are then the 3 legs to the fraud triangle. Let's have a look then for considering laws and regulations. So we spent some time on the recording also discussing and considering what the auditing standard requires of us as auditors in terms of considering the clients, what laws and regulations they have to comply with, and what we need to test in that regard. So here the question is, we must test compliance with all laws and regulations, true or false. As auditors, do we need to test compliance with all laws and regulations, or only some? Or nothing? Do we have to test all compliance or not all compliance? Let's see. I see a number of chats coming through, so I really appreciate that. Let's see what the majority view is. I click on the chat and then it doesn't open. So let me just click again. All right. Ooh, on the poll itself, we've got a 55-44. So let's see there. Is it true? Is it false? In the chats, I've got a number of trues coming through. In the voting, now starting to turn towards a true, but we still have a lot of falses. So it seems that there's possibly we must test all compliance with all, or possibly not. Any other voices we're going to get, votes that we're going to get to help us to sway one of the ways? Okay. All right, there is a lovely slide where I use the analogy of a zoom lens where we zoom in further and further as we go through. So if you haven't watched the recording, go and do yourself a favor and go watch that. Well, watch the whole recording, but especially with regards to laws and regulations where we then focus on this. So the correct answer is false. We do not have to test compliance with all laws and regulations. Because if we had to test if the client is compliant with all laws and regulations, it would also mean that we need to test whether the driver who does the delivery did not speed. And I'm sure you're going to agree with me. That's ridiculous. We're not going to do that. So as a reminder, what is it that we need to do? We get an understanding of what laws and regulations is applicable to the client. That's almost like standing, I almost want to say standing on the outside, standing far off, starting far away with our zoom lens. what is the legislation that the client has to comply with? There is business legislation, so they need to, if they have employees, they need to be registered for UIF, Skills Development Levy, etc., Basic Conditions of Employment Act. Then if they need to be registered for VAT, they need to comply with the VAT Act. If it's a company, they need to comply with the Companies Act. All those kind of, I like to just think of it in my mind as business legislation. Then we also have, Employees Health and Safety Act. We have, Income Tax Act, they must pay taxes. Occupational Health and Safety, a variety of those. So those are the ones that are almost applicable to most clients in a South African environment. And if you are from outside South Africa, I'm sure you're going to have similar stuff. And then we have almost industry-specific legislation. So if you are in mining, you're going to have some requirements around mining. Don't pollute. Well, I guess that's also applicable to all businesses, but especially in a mining environment. Don't pollute the mine water or the groundwater. How to not pollute the air through not burning stuff and things like that, like the coal and all of that. What do they call that? The CO2 pollution. Then we are going to have mining licenses that I need. We are going to have, if I am in the construction industry, I need to comply with the construction requirements so that, heaven forbid, our buildings don't also fall apart, like buildings seem to be falling apart everywhere these days because we didn't go through the municipal rules of getting plans approved, etc., using the right quality of construction material, etc. So all of those legislation will be applicable. So let's call it the general business legislation, as I just grouped all of them together, the employee legislation, and then the industry specific things. So all of that, we get an understanding what is it that they need to comply with. Then we zoom in and say, right, so for those ones that they need to comply with, how are they complying? We get an understanding of those legislation that they need to comply with that's affecting the financial statements. So whether it is directly affecting the financials or possibly affecting the financial statements. If they never, ever can affect the financial statements or not even affect the business, let's say, for example, it's our manufacturing business, wrap-up manufacturing, we have, let's say, legislation around attorneys' trust accounts or legal practitioners or estate agents or auditors. I mean, those are very specific industry-specific legislation, not applicable to our manufacturing company. So not relevant. We don't have to worry about them. But we start with, how are they complying with it? Then, here's important. Next up then to say, do they seem to be complying, or are we aware, can we find instances or evidence of them not complying that can lead to material penalties? So there, even let's say, for example, in South Africa, again, skills development levy. So the business has to pay over 1% of payroll to the government specifically for skills development levy to help people to develop their skills. So that 1%, it's not material to our financial statements, but if we don't pay that over and there could possibly be a big penalty and that penalty could be material, then we say, well, it doesn't have a direct material effect, but if they're not complying with that and they get a penalty that could be material, then we will regard that one to be indirectly affecting the financial statements if it's not compliant. There the standard says we must obtain evidence to confirm, not obtain evidence. We need to identify whether there's any indication that they're not complying. So it's almost like a negative assurance there. How do you do that? You inspect returns or other certificates or things that show compliance. And then only, now I really hope I'm not running ahead with my next poll. I can't remember what my next poll is. But then only when we know that the financial statements are directly affecting and it's materially affecting my financial statements, only for those laws and regulations must I test compliance. I want to use the word fully within that sentence. So only, for example, with income tax, only where I have to comply with VAT, then I'll test compliance with the VAT Act. Again, in a South African environment, the Companies Act, for example, affects certain disclosures in the financials, like directors' remuneration. We will go and test compliance with that, full compliance. There I'll test compliance with the laws and regulations. So actually do audit procedures to test it. Otherwise, understand what laws and regulations are relevant and understand to what degree are they complying with it. Okay, so definitely not full-on compliance assurance that we need. Those would be separate engagements. Good. Right, now that's exactly what I was afraid of. So let's see this poll. I think I might have given it away, but let's see what we are saying. I was concerned when I started to explain to this degree that I might be giving this one away. But right, let's see. This one says, which of the following statements is true? Laws and regulations with a direct material effect on the financial statements require compliance testing, so full-on audit testing. Laws and regulations with an indirect material effect on the financial statements require compliance testing. All right, so if you listened carefully, you might have picked up on that one. Otherwise, let me know which one you are selecting. Good. It clearly looks like everyone was listening. I almost want to react to that poll myself and say, well, obviously that one was obviously given there. All right. Hey, yes, thank you very much. So, of course, as I mentioned, laws and regulations with a direct material effect. In other words, there will be something in the financial statements, and if that is wrong, it will be materially misstated. So either has a big number in the balance sheet or income statement, or there's disclosure in the notes, things like that. Right. So definitely indirect. We don't have to test full-on compliance, no detailed working procedures. I will just basically look at and inspect things like submissions, declarations, let's say like a return submitted to the revenue receiver, things like that, for that skills development levy compliance in my example. Next up, so that was laws and regulations. Next up, we're talking about resources. And resources can be many things. I'm just going to say that for now. And then just say, let's look at the poll. Resource allocation includes consideration of whether staff, the team members on the audit, have the appropriate tools to perform their responsibilities. So, as I said, resources can be many things. Can resource allocation and our consideration of the allocation of resources also include or involve that we are thinking about whether the staff have the appropriate tools to perform their responsibilities? True or yes, or false? No, not at all. You can tell me which one you believe to be the right one. Good. Lots of responses coming in. Looks like many people are thinking about this one. Do you believe resource allocation to also include tools to perform the responsibilities? And if we look at the poll, it is clearly the case. You do believe that this is the case. So resources, years gone by, we used to always only think about human resources, so the team members. But I almost want to say the realization has come and said, well, actually, the human being can only do so much. We need more. We need to have the technical resources, the technological resources, intellectual, the methodology, for example, maybe working paper templates, time. Does that human being have time? And do they have the necessary capabilities? Do they have the necessary experience in the industry? And so therefore also in terms of tools, if they need to do selection of samples, if they need to do analytical review, if we want them to do data analytics, do they have the necessary tools? Do they have the latest templates of caseware? It's even one of the considerations, right? So that is very important as well as part of the considerations for resources. Then, here's a question. Identify the odd one out. When communicating with the audit team, we must include, so it's almost like your planning meeting. When we are communicating with the audit team, what must we include in that communication? The risks identified, the expected behavior, or the detailed rundown of the work on each section in the audit file. So identify the odd one out. So 2 of the 3 is right. 1 of them is not entirely right. So you can tell me which one is the one that you don't agree with 100%. As you can see, there's no option to say none of the above. So 1 of them is not correct. Which one is that? I'll launch the poll for us. There we go. Which one is not correct? Where we actually need more. Looks like this one is perhaps a bit of a more tricky one. This is referring to our, I want to call it planning meeting, but of course the planning meeting doesn't have to include all of the staff members or all of the team members of the audit. So it could also just be that we have a little planning meeting between the partner and the manager, for example, or maybe the senior on the audit, and then we have that communication or the outcome of that communication shared with the rest of the audit team. Which of these 3 items is not necessarily required? I see a number of responses. Thank you. So indeed, let me just see the majority in the poll is very close majority. We've got 43% talking about the expected behavior and 45% talking about a detailed rundown, and it literally changes. Now we're back on 44 for each of them. So the correct answer in terms of which one is the odd one out is indeed the last option, the detailed rundown of work on each section in the audit file. Right, so what do we need to communicate to the audit team? We have to communicate the audit risks identified. So which are the audit risks that we've identified so that we can go and respond to them? All the team members need to be aware of that. We need to communicate, and in fact, the standards say the engagement partner must communicate and remind audit team members that they need to be professionally skeptical, that they need to treat information confidentially, be aware of fraud risks, things like that. So that is what we mean by expected behavior. So that is definitely one of the things that need to be included in the communication. What we don't need is that every single team member does not need a detailed rundown on every audit section of what's going to be done in the audit file. In other words, we're not going to start and say, right, let's look at all of the sections. Right, so on the bank and cash equivalent section, we're going to do this and we're going to do that and we're going to do this and we're going to do that. On the trade receivables, this and this and this and this and this and this and this, PPE and so forth. We don't have to do that extent of understanding. What every member must have is they must have an understanding or a rundown then, if you want, on their own sections that they're going to do. And there we don't have to have the discussion and mentioning it to each of them. Every person needs to have an understanding of their own sections, of their own work. And if the planning has been done properly and the audit plan, the work programs have been amended as part of our planning, we would see that those procedures and things will already be reflected in the work program. So then as a team member, I can go and look at the work program, go and look at the audit plan and strategy, and I'll be able to see what are the elements or what is the detailed work required for my sections, the sections that I've been allocated. All right, so maybe a bit of a tricky one there. The last option, the detailed rundown of every section, is not required. All right, and then next up to say there is a presumed risk of fraud, if you want, presumed risk of management overriding controls in every audit. What are the 3 parts of this risk? So where are the possibilities that these that this risk can be affecting the numbers in the financials eventually, and so therefore that's where we're going to go and respond. So a bit of a something to think about. So we're talking fraud risk here. We are saying there is a presumed risk of management overriding controls and therefore committing fraud through that. What are the 3 elements that can be affected by that and therefore that we are going to respond to? And the options there, point 1 is estimates, journal entries and related parties. Option 2, revenue, journal entries and related parties. Option 3, estimates, journal entries and transactions outside the normal course of business. So let's launch that poll and then we see what you say. Good. So what is the option that you'd say? What are the 3 parts of that risk? In other words, where the fraud can be committed by the overriding of controls and therefore that we are going to respond to this risk in those elements. Okay, I see a few votes coming through. Quite a variety of options there. I'm going to give you a few minutes to think about this one because I really want you to remember this one. So I'm telling you there's a fraud risk, and remember fraud risk is always a significant risk. And this fraud risk is that management has the potential to override controls in order to commit fraud. And where is that possibility? Estimates, stating estimates, journal entries, and transactions outside the normal course of business. Revenue, related parties, variety of options there for us. So, yeah, lots of repetition there, but we need to identify which one. This, of course, is fraud risk, still at the financial statement level, overall level. Okay. Having a look at the chat and just want to see where we are with the poll as well. All right. This is an interesting one. So the results from the poll indicates that the majority believes the middle one, option 2, to be the case. So I've got a colleague who refers to the rule of 3. So the rule of 3, there are a number of 3s here. The first rule of 3 is that there are 3 assumed fraud risks. Fraud risks in the standard that are assumed or presumed fraud risks. The first one of those 3 is the risk of management override of controls. The second one is revenue. So there is a presumed risk of fraud in revenue recognition. That is one of the other fraud risks. And the third one is where there are significant related party transactions outside the normal course of business. Then that is presumed to be a fraud risk. So those are the 3 risks. 3 fraud risks. Then when we get to the management override, apologies, the management override of controls, there are 3 elements in which we need to respond to that, and those are then also the elements where potentially misstatement or manipulation can happen. Those are then, and that's from the poll, that's the last option, estimates. So management can manipulate estimates by overriding control. So they can just say, listen, I'm thumb sucking this number. I'm not going through calculations, or I'm manipulating my calculations to get to a number. And this is my estimate of useful life, residual value of fixed assets. This is my estimate of how much to provide for not recoverability of debtors, etc. Or I can say, well, I estimate that we're going to use it over 7 years or 15 years, or whatever the case may be, and I can manipulate my reason or manipulate how I got to 7 or 15 or whatever it is. Then journal entries, and with journal entries there, we have very specific responses in which we will specifically go and test. Journal entries, for example, around the year-end closing process is one of the higher risk items. Journal entries to preparing financial statements. And then one can also go and add extra ones. And then lastly, transactions outside the normal course of business in general. So remember now when I spoke about the 3 assumed risks or presumed risks, there was transactions outside the normal course of business, but that was with regards to significant related party transactions outside the normal course of business. So just significant related parties, not a fraud risk, but if it's outside the normal course of business. But here in management override, any transactions outside the normal course of business. So it doesn't even have to be with the related party. It can be to a non-related party. Right. So those are the 3 elements. And also when you see the responses that we have in the methodologies to responding to management override of controls, we are addressing those 3 elements of the risk. Good. So that is then, I almost want to say a quick recap of the theory that we discussed in session 3s or the video 5 and 6 from the e-learning, and what we are going to apply and also look at in the methodologies or in the software later on. Next up, we're going to say what is coming up, what are we looking forward to, and what are the things that I want to set you up with so that we can continue. What I just think what we should do is maybe take a comfort break, because I want you to be fresh when we, one, obviously look at what's coming up next, but secondly, also when we work through that software. I want you to be fresh and ready for that. So let's take a comfort break. My watch says it's almost quarter past 10. It's about 12 minutes past. So by the time I'm done talking, it's quarter past. So I will give you 10 minutes comfort break, and then we will reconvene at 10:25. Right. So go get something, stretch your legs, walk around, whatever it is that you need to come back refreshed. And then we will continue with the rest of the session, what's coming up, looking ahead at the rest of the series. And then also then straight after that, we'll jump into the breakout sessions where we're going to actually go and see how do we apply this to the methodology, and very importantly as to how that's new in the latest templates. Right, so that's definitely something to look forward to. Good, so comfort break then until 25 minutes past 10. Right, enjoy your break. So firstly, the definition or the term of relevant assertion. So in ISO 315/2019, so that's the latest, newest standard on risk assessment, there was a number of changes. And one of the big things is that you don't have to test every single assertion anymore. You only have to test or get audit evidence for those assertions where you have identified risks. And the standard then has very specific terminology for those. So these are the 2, I just want to say the most critical terms. Firstly, a relevant assertion. Now, if that is a relevant assertion, means there is an assertion that has risk. So it is created by raising a risk, as we say there in the purple bubble. Of course, the long definition means it's an assertion about the class of transaction, account balance, or disclosure, and many people refer to that as a category. That is relevant when it has an identified risk of material misstatement, and that is determined, of course, before considering controls. So how do we identify a risk of material misstatement? That is when we have one of the inherent risk factors present, and we say because of the complexity, the subjectivity, or the whatever it is, there is a risk that this may be materially misstated, the completeness of the whatever account, or the accuracy, whatever the case may be, and then we raise a risk for that assertion, the completeness, the accuracy, etc. That's a relevant assertion, right? Then the next thing is to say that when we have a relevant assertion, that account balance, that class of transaction, revenue, property, plant, and equipment, whatever that class of transaction, account balance, or disclosure is, that this assertion is linked to, that is then no longer just as any class of transaction, account balance, or disclosure, but because there's a risk now linked to it, it is now regarded or termed a significant class of transaction, account balance, disclosure. And the significance have nothing to do with significance, materiality, anything like that. It is simply indicating that this category has an assertion, a relevant assertion linked to it, and now it is therefore then a so-called category or a significant class of transaction, account balance, or disclosure. All right, so that's really just what a significant loss of transaction account balance disclosure means. There is a relevant assertion attached to it, means there's a risk recorded for it. All right, but we do discuss that in quite a bit of detail in the recordings, in the next session's recordings. There are 4 videos for you to watch for the next session in 3 weeks' time. 2 of them are on theory in terms of application of how to do the risk assessment at assertion level, which is of course these two terms that we've discussing, and then also 2 of them in terms of application to scenarios for wrap up. Then in terms of the audit flow, when we have a risk identified, then we, as we said, then we have a relevant assertion and we have a significant loss of transaction account balance disclosure. Scotty, what is the standard required? Just as a quick introduction, you must then have a system description of the flow of information. Right, so that is what the standard requires. Only if you have a section with a risk recorded, must you go and get an understanding of the system description. And then you also need to perform field work, further work if you want, to address those risks. Right. There is another element to material balances, so that you'll also learn in the recordings, but at least then to say we've now discussed what is the relevant assertion, what is the significant loss of transaction account balance disclosure, what is the work required for those. All right. Good. Then that's the next session. Then also where you then after today, if you haven't yet watched today's sessions, I really want to encourage you to watch those recordings. But then other than that, please also go and watch the recordings from module 3. And then of course join us on the morning of 27 March. And then Brandon and Tamai and probably a number of you are going to also spend the afternoon with me when we are going to talk about probe review and specifically then the application of all of that theory that we had, applying that to the session. To a case study, to a case file where we're going to go through step by step through a independent review session. Right, so that's what's coming up. And then I almost want to say the only thing that's left, it's not really the only thing that's left, but what is still left then for us is to go to our breakout sessions to go and see how does all of this assessment at financial statement level get applied in the software. All right, so I'm going to just add the link for the breakout session to the chat function, and then I'll explain who is going where. So you may remember, or you may be aware, that the breakout rooms on the Teams is not as effective as we've expected it to be. So what we are doing is the Probe Audit Premium Plus users, you stay in the session, you don't go anywhere, and we will just continue in the session. The users that use Audit International, please follow this Teams link, and then you go to another meeting where you will then meet Samu, and I think Mateo said he's going to go with you there. So Mateo will assist Samu there. More Blessing is staying with us, or otherwise the other way around, but there will be someone from support as well as then Samu who's going to be presenting there to help you through and show you what does the Audit International application of all of this theory then look like. All right, so you're welcome to now join that link if you are using Audit International. And then basically leave this event. So thank you very much. Samu is going to finish off the session for you. She'll give you the course survey, the post-course survey link, and all of those things. So we'll talk again on the 27th of March. For all the Audit International guys, you can follow the link to the breakout room. And the Probe guys, you just hang around here. Let's just give them 2 minutes to join their session, and then we will continue in Probe.